Tonight, we're diving into a financial revolution that's unfolding right before our eyes, shaking the very foundations of an industry that's been a cornerstone of our society for centuries. We're talking about the slow but steady demise of traditional banking as we know it. Picture this: the local bank branch where your parents opened your first savings account, where you got your first mortgage. Now imagine it empty, lights off, windows papered over. This isn't some dystopian future. It's happening right now, in cities and towns across America. Let's break down the numbers and brace yourselves because they're staggering. According to a recent study by Accenture, a whopping 88% of consumers now use digital banking channels. That's nearly 9 out of 10 Americans who prefer pixels over paper when it comes to managing their money. But here's where it gets truly mind-bending. The same study found that 47% of consumers, almost half, are ready to go all in on digital, saying they're willing to switch to a bank that's completely branchless. It's a financial exodus of epic proportions. Since 2008, over 13,000 bank branches have shuttered across the United States. That's more than 14% of all branches, gone in just over a decade. And the trend is accelerating. In 2020 alone, banks closed a record 3,324 branches. But it's not just about numbers on a spreadsheet. This is about the very fabric of our communities. For many small towns, the local bank branch was more than just a place to cash checks. It was a community hub, a place where relationships were built, where local businesses found support. I traveled to Millbrook, Alabama, population 15,000. The closure of their last remaining bank branch has left a void that's palpable. Mayor Al Kelly didn't mince words. It's like the heart's been ripped out of our downtown. Folks here, especially our seniors, they're not comfortable with all this online stuff. They need that human touch. Now, they're feeling left behind. But here's the twist in this tale of digital disruption. While traditional banks are struggling, a new breed of financial institutions is rising from the ashes of closed branches. Enter the world of digital-only banks, or neobanks. These branchless wonders are growing at an astonishing rate. Chime, one of the leading neobanks in the U.S., boasts over 12 million customers, a number that would make it the 5th largest bank in the country if it were a traditional institution. FinTech analyst David Chen explains, "It's all about convenience and cost. These digital banks operate without the overhead of physical branches. They pass those savings on to customers through higher interest rates on savings and lower fees. Plus, they're innovating at a pace traditional banks can't match. But traditional banks aren't going down without a fight. They're pouring billions into digital transformation efforts, trying to bridge the gap between their brick-and-mortar past and a digital-first future. JP Morgan Chase, the largest bank in the U.S., is leading the charge. They've launched a digital-only brand called Fin, aimed squarely at millennials and Gen Z. "We recognize that banking needs are evolving," said Emma Stewart, head of digital innovation at Chase. "Our goal is to offer the best of both worlds, the trust and security of a traditional bank with the convenience and innovation of a digital platform." It's a high-stakes game of digital catch-up, with traditional banks racing against time and technology. But is it too little, too late? As we stand at this crossroads of banking evolution, the questions are manifold and complex. What happens to the millions of Americans who aren't comfortable with digital banking? How will this shift affect lending to small businesses, traditionally a stronghold of local bank branches? And perhaps most crucially, in a world where your bank exists only in the cloud, what happens when the internet goes down? This is Alex Cooper. As we move further into this digital age, remember, your money may be virtual, but the impacts are very, very real. Good night.